Good evening and welcome to WiseViews Leadership Conversations. We are on session number 228 and we are joined by Mr. Srishant Challa. Good evening, sir, and welcome to this conversation.
Good evening. Thank you.
I will do a brief introduction. Allow me to share my screen and then I'll request you to start your session. WiseViews Leadership Conversations are held on Fridays and this is 228th session. And this session will be led by Mr. Srishant Challa of CCL Public Limited. He is the Managing Director of CCL Products India Limited, and the topic is the B2B to B2C pivot, reinventing a manufacturing giant into a consumer brand. And this introduction and the opening remarks will be for about 25 minutes, and then 40 minutes of Q&A followed by that. I take this opportunity to introduce Mr. Srishant. He is a second-generation entrepreneur and a lawyer by education with more than 2 decades of leadership in the global instant coffee industry. He holds a law degree from Nalsar University of Law and a diploma in IT law from the Asian School of Cyber Laws. He earned a gold medal in corporate law at Nalsar and was the Andhra Pradesh state topper and gold medalist in mathematics. Very interesting. He joined the family business in 2005, was appointed executive director and later managing director. Built CCL into the world's largest private label instant coffee manufacturer with a presence in over 110 countries. He led establishment of advanced instant coffee facilities, including units in Switzerland and Vietnam, to diversify capacity and reduce geographic concentration risk. The introduction itself is talking about well laid out strategy. He transitioned the company from founder driven to process driven operations, improving standardization and reducing human error, launched in-house consumer coffee brands and scaled CCL's B2C business to become India's third largest coffee brand just within 7 years. He is driving CCL's strategic move from a pure contract manufacturer to a diversified FMCG company with a global footprint. He emphasizes systems, quality, and scalable processes over people-dependent workflows, focuses on sustainable growth, capacity planning, and risk mitigation, fosters professional management, and mentors startups across sectors, maintains a disciplined approach to work, life, and spirituality with a commitment to daily learning, holds directorships across manufacturing, construction, and IT companies, and serves as a member of the Coffee Board of India, founded and he mentors several professionally run startups that are scaling sustainably. That's an amazing background, sir, to have you with us on this one of the largest running podcasts hosted by ICFAI. And once again, I want to thank you for joining us this evening. I will also introduce my esteemed colleague, Dr. Prasad. He is the Senior Director in Academic Wing at ICFAI. He brings about 3 decades of rich experience as an entrepreneur, as a corporate professional, and now as an academic. He holds BTech from IIT Bombay and PGDM from IIM Kolkata. Welcome, Dr. Prasad. And we are all set to learn from you the strategic moves and learn from what was known as Continental Coffee is now acronymized as CCL Products India Limited, and much more to the strategy. Over to you, sir, and thank you once again for joining us.
Thank you, Sudhakar Garu and Dr. Prasad for inviting me to do this podcast. So let me just get right down to it. I'm the Managing Director of Continental Coffee. I'll just briefly run through what we do and all that. But before that, I wanted to start off with how many of you have had coffee this morning? This is a question that we ask because in our country, it's still a tea-consuming nation. So coffee consumption is something that has been picking up of late. And we are seeing a tremendous growth over here. Globally, coffee consumption is quite high. And India and China are 2 countries which are increasing their coffee consumption quite a bit. Now, just a brief background about coffee. It is the world's most loved beverage after water, and it's the second most traded commodity in the world after oil. Coincidentally, both are black liquids, and where coffee grows versus where coffee is drunk. I'll just show you this coffee belt. So between the Tropic of Cancer and the Tropic of Capricorn is where the coffee is actually grown, but it is consumed in the developed world and the rest of the world. So that is one of the reasons why it is one of the largest traded commodities in the world, the second largest traded commodity in the world. Now, when you come to the Indian context, this is the basic history about Indian coffee. It's there online also. Most people can easily see it if they're not aware. So how there's this Muslim saint, Baba Budan, who smuggled 7 beans of coffee into India and planted it. And from there, it slowly spread to other parts from Wayanad, Chikmagalur, Kerala, other places as well. Today, India is the seventh largest producer of coffee in the world. So in 1980s, that was when my father is the one who started this company. As you mentioned, I'm the second generation. So this company was started by my father. So in that context, he was asking this question: why should India export only raw material or green coffee beans? Why can't we actually start exporting finished product as well? So in 1890, in the 1980s, that is when my father, Challa Prasad, he is the one who decided that let me set up an industry, let me set up an instant coffee manufacturing unit and start exporting. So with this idea, CCL Products or Continental Coffee at that point in time was created. He had faced numerous hurdles at that point in time. That was a license Raj time, and getting permission took him about 7 years. So he went through a lot to actually get the approval to set up the factory at that point in time. So based on, in fact, when he set up this company, also one of the commitments that he had given his father, my grandfather, who was the Chief Justice of AP at that point in time, was that while getting into business, he will not give a bribe to anybody. So what, as a consequence, he had to face numerous legal cases. That's one of the reasons he asked me to become a lawyer by education. And I didn't get into business. I got into law because of this main reason. And so once he decided that, okay, I'm going to get into business, he had to choose the right business model for himself. There are two basic types of business model one can choose from. One is, are you building the company to sell, or are you building it to last? So you have to take this call. Today, when there's so many startups that are there, this is relevant today for almost everybody. Whether you're looking at getting a job in a company or whether you're looking at setting up your own company, this is a fundamental decision one has to take. Are you building to sell or are you building to last? If it's building to sell, you'll focus on your top line growth, aggressive sales. You're using somebody else's money to achieve this kind of growth. And then you'll find another buyer and get a complete exit. If you're building to last, you're looking at making sure that you have the right foundation. You'll make sure that you have the right, sustainable growth over the years. Now, in our case, my father decided that he wanted to set up a company that was built to last. So the company growth over the years, you can see it on this graph. In 1995, he started with the company in 1995. From 95 to 2005, from 0 to 100 crores is what we had grown. His entire business model was we manufacture and we supply to only 2 customers across the world. He divided the world into 2 parts. One person based in London, the other person based in New York. These 2 customers were the only 2 individuals that he was interacting with and selling to. He did not say that I'm going to go to everybody, I'm going to sell to everyone directly. He just identified 2 trading companies and started selling to them. These 2 people helped us build a foundation for us. And from 1995 to 2005, we were able to establish this company as a self-sustaining business. Now, this is the most critical period in a company that decides whether the company is going to survive or no. Most of the companies end up failing in this stage itself because they take on too much. They take on more than what they can chew. So at that point in time, he was very clear and he focused in a manner and he managed to achieve this kind of result. So 2005 is when I had joined the company as well. And at that point in time, there was a small transition that took place. So we had transitioned from a B2B company restricted with two companies to we started telling our partners, these two partners who were there in New York and in London, that we will work with them on an exclusive basis only with specific customers. We started telling them that all the customers that you're not talking to, we would want to start approaching them directly. So we created our own sales infrastructure, our own network. And that is why you could see a much more sharper growth from 2005 to 2014. So this was a very critical period for us again, because it enabled us to change our business model. So what got us here from 95 to 2005 will not take us there. So which is why we had to change our model. In 2014, we again went about relooking at strategy and we started changing things again. In the next leg, we introduced our own brand. This is where we introduced our B2C brand. Now, this was a period, actually, one of the reasons for this introduction is I was sitting in a meeting with one of our B2B customers, and they were a branded company only in coffee. We were looking at their production capacity and their sales versus what we were doing. Both companies had almost equal volumes. We were selling the same volumes. But the only difference between them and us is their valuation was 5 billion and we were at 500 million. It didn't make any sense. All your ratios, all your proportions, everything was almost identical. The only difference between them and us is they were a brand and we were purely into B2B space. That is when we said, okay, if you want proper sustainable growth in the long run, B2C segment is something that we really must explore. And one of our biggest challenges at that time was most of the companies in India, whoever tried to venture from B2B to B2C have failed, including us. We did one experiment in 97 and in 2006. Both times we did not succeed. So this time we thought, let's do it a little differently. We started very small, went to local supermarkets and started focusing on how do I start selling my brand without spending the kind of money that branded companies normally spend. We came up with some very unique strategies and that really worked for us. We saw a very good response and slowly the volumes also started increasing. Now from 2006 to 2036, the next 10 years, the next leg of growth, what we are looking at is focusing on not only our core, which is B2B, sustainable growth, we are also looking at B2C, international expansion as well. Now, our supply chain across the globe today, we have factories in India, one in Guntur, one in Tirupati. We have another factory in Leverrier in Switzerland and another one in Vietnam. These 4 factories are now helping us supply to 110 countries across the world. Now, what did we learn with these factories? What did we learn over the last several years? We've learned customer taste preferences across countries. We've learned customer behavior. We understand what are the coffee formats that are popular in different parts of the world. We understand retail dynamics as well. All these learnings we got thanks to our customers. Now, this knowledge, this information is giving us a perfect foundation for that international expansion as well. Now, so in 2015 is when we launched our Continental Coffee in India. These are our products. Today, we are the 3rd largest brand by market share in India. We are the 2nd largest brand in places in Andhra Pradesh as well as on online platforms like Zepto and Amazon. This is a heat map, like what we start on the left. This is what we started with. On the right, this is where we are now. And so we've recently, a couple of years ago, we acquired this brand called Percol in the UK. Now, interestingly, this is a brand that we helped co-create in 1997. The brand owner, he came to us in Dugirala, he sat with us, and we helped him create this brand from scratch. In 2016, he had achieved from zero, he went up to almost 150 crores he was generating in the form of revenue. It was highly profitable. That is when he decided to sell his company. He sold it to a Swedish company called Lovebirds. Now, after he sold this company, the new guy who bought this company decided, I don't want to buy from an Indian manufacturer, I want to buy from a European manufacturer. So they completely stopped buying from us overnight. Now, when a when a supplier shift happens in this manner, the new supplier, if he cannot match the quality, then you'll start facing a backlash. From 2016 to 2023, from 150 crores, the brand came down to 20 crores. It was dying a natural death. When in 2023, we approached them when we acquired the brand. And at that point in time, when we acquired, it was at about 13 crores. From 13, in next 1 year, we were able to revive the brand by just going back to the original formulation. We were able to get back to 20 crores in 1.5 years. And now we have a clear growth path ahead of us for this Percol brand. Now, the biggest dilemma that we faced as a company, can B2B and B2C coexist? Now, this is the crux of, what we do. We use India as a test market to see, can these two segments coexist? We created a team and we asked that team to handle both B2B as well as B2C. Today, 90% of the B2C market, which is there in private label, is with us. We supply to several brands, let it be a Sleepy Owl, a Rage Coffee, a Reliance, Spencer's, Big Bazaar, even a MedPlus will buy from us. So this is our core strength. We understand how brands work. We know how to support brands and give them the right product, right blend to make them survive and grow in the market. Now, our objective has been, let's increase the pie. Let's make sure that more people drink coffee. And that is something which we are striving to do. We're not just trying to get market share from existing people. Our objective has been, how do you expand that pie? Now, just some data points over here. So one, the largest, CCL is today the largest B2B instant coffee manufacturer in the world. We have more than 1,000 plus coffee blends that we are exporting to more than 110 countries. We have manufacturing facilities in India, Vietnam, and Switzerland. So bottom line is there are about 1,200 cups of continental coffee consumed every second across the globe. That is the magnitude of what we've been able to achieve in the last 30 years. So that's about it from my side. So thanks. If there's any questions, let's...
Thank you, sir. Thank you very much. Thanks a lot. That's a fantastic introduction to the origin story and also the growth story of Continental Coffee. It's amazing how in a very short span of time, given the schema of businesses that we look at when we study also and when we look at businesses folding and unfolding, the timeline that you have shown is not pretty huge. So in a short span of time, the pivot that you have made is very interesting, and we are quite keen to understand what went really behind muzzling up the B2C brand building from your organization, which you have identified as a driver for long-term growth. I mean, that's the most important takeaway from this introduction. The second and the most important thing is probably during the Q&A, it will be clear, is to understand how in a market like India, more coffee is being promoted for consumption. I think people take more tea. That's what we generally believe. but you may have better statistics to prove that or disprove that. And the third and the most important thing, sir, is we are quite keen on learning from you in the other resources that you have built for taking it forward. Obviously, that comes in the Q&A. But I want to thank you for making this wonderful introduction, a lot of data points and strategic moves that you have talked about. The world looks like, moved from commodity green bean coffee being exported or supplied to the very coffee that they consume. I think that's a huge changeover, and it is very difficult to make and interestingly challenging for everyone involved in this game. Thank you, sir. And I also want to take a moment to acknowledge the presence of a large number of people around the screen today. Very interesting people have joined from various fields. We are also joined by Pratap, who is our alumnus of ICFAI Business School, first batch at Hyderabad. Welcome, Pratap, and I welcome all others who have joined to learn from Mr. Srishant today. So let's get going on this journey, and I'll now request Dr. Prasad to initiate the first cluster of Q&A. I'll come back for the second cluster. In my cluster, I request friends to raise their hand and ask questions directly to the speaker. Over to you, Dr. Prasad, and thank you so much.
Thank you, Professor Rao. Thank you, Mr. Srishant, for such a wonderful introduction of a truly unique product, made in India product, that too in FMCG, which is making waves. So there's quite a bit to learn. I'll start my the first question with an interesting statement you made. You said when you came into the B2C, you were looking at how to get there without spending too much. So if I have to put it in context, and if you compare it with the normal FMCGs, the Nescafe types, Nestle types, and you have become the third largest in 7 years. What is the difference in your approach, management vision, values, strategies, and how did you get there?
So, so very interestingly, sir, at that particular point in time in 2014, we were in a situation where we already tried entering the domestic market 2 times. In 1997, when we tried entering the domestic market, our turnover of the company was around 20 crores. We had a loss of about 19 crores in that particular year. We were hit very badly. So it almost reached a situation where the company was not going to survive. 2006, after we withdrew from the market, we focused only on the core business. 2006, we made another attempt. This time we had a tie-up with Jyoti Labs Limited. This was before they went public. So they said, we'll use our distribution network and you just do the manufacturing, supply the product to us. We tried this for a little while, but then we were also running at peak capacity for our exports. And they were asking for certain products that we couldn't provide at that point in time because we didn't have spare capacity. So we withdrew the second time. This third time, when we wanted to go, in fact, we got a lot of resistance from within the company itself, saying that, why would we want to attempt this again? We are risking a lot by actually getting into this B2C segment. So one of the commitments I made was, okay, let's see if we can build this brand without spending anything. One of the uniqueness for us was when we initially decided to launch in 2014-15, we did not engage any agency. We did not engage even a professional company to create artworks. We sat with our printer, who does the label designs, created a temporary design over there, printed a couple of labels, put it on a glass jar, and we went to Balaji Supermarket. We spoke to them and we said, listen, right now, what is the margin that our competitors are giving you? They said, okay, it's ranging between about 12 to 15% or something like that. We said, we'll give you a 45% discount on MRP. Okay, just place the product on the shelf. We want to see the response. We didn't do any customer surveys. We didn't do anything. It was just blind faith that we know what good coffee is. Let's see if it'll work. Once we placed the product, the product was just flying off the shelf. The retailer was highly incentivized to push our product because of the margin that he was earning. And not only was he pushing the product, he was having an interaction with customers, convincing them. People normally don't want to change from what they're used to. If they've been consuming one particular coffee, they're usually very sticky to that particular coffee. But we introduced a chicory coffee blend, we introduced a pure coffee, and we introduced a freeze-dried coffee. So whatever product alternative that they were buying, automatically the supermarket was saying, this is an alternative, try it out. And people started giving feedback. We actually ended up changing the blend 3 times in the next 4 months by getting this feedback. We didn't do any official surveys or anything. But after changing the blend, one person comes and says, I want it to be a little darker compared to the competition. Yours is too light when I add milk. So these kind of feedback we took, and we perfected the product. Within 4 to 6 months, we had confidence in the product. Step 2 was, now we had only 2-3 people doing the marketing. They come and tell me that, listen, the product is so good. Can we do an experiment? Let us do a buy one, get one free for a 200-gram jar. The logic that was given to me was, we've been consuming this coffee in our house. After consuming 1 or 2 jars, it's impossible for us to go back to the competition. So we said, let's test it out. We tested this theory out, and within no time, we got an excellent response from the market. Now, what we realized, even after doing a buy one, get one free, we were earning higher margins than what we were getting in the export market. So we were able to use that extra margin that we were earning to start professionalizing a lot more. We started going into more supermarkets. We started correcting the margin structure. It reached a certain stage. Within the next 2-3 years, when we reached about a 5-6 crore turnover, that is when we decided, let's completely professionalize everything. We managed to get a CEO into the company from Dabur, who had 17 years of experience in Dabur. Once he came on board, he built a completely different team to focus only on the branded sales. And they started growing the business in a much more sustainable way. So from where we started, and within the last 7-8 years, we have managed to come to this number 3 position on a pan-India basis.
I think it looks like a classic bootstrap journey in the beginning.
Yeah.
And then, moving into professionalism. Wonderful. And that too in FMCG. I wonder why more people don't do that. Okay. I'll move to the next question. In your website, you've used the terms, to be a world-class organization in thought and practice. And you are there both in India and globally. So in practice, what does this mean?
Okay. So for just a simple example, right from 1995 onwards, as an organization, we've always followed CSR practices. So as an organization, we've always made donations. We've always made this part of our DNA. CSR as a law came in only several years ago. But right from the inception of the company, that was inbuilt into our DNA. Today, whatever we do, environmental norms, for example, today people are talking about ESG. Right from 1995, the way we built the company, we are a zero discharge company. Not only do we use everything, for example, the coffee beans that we use water and coffee beans to make the finished product. The coffee waste that comes, we use it as fuel for the boiler, and the boiler generates steam, which we use for production. And the waste that comes from the boiler is ash. That ash we sell to brick manufacturers. Okay, so it's a complete ecosystem that has been built right from 1995 itself, talking about sustainability. And that kind of vision and foresight was there. Just imagine, 30 years ago, we had that kind of vision and foresight. We always wanted to be ahead of the curve. Whatever laws that are coming today, let it be standards, the new standards that are coming up on a constant basis, food safety standards. We have been incorporating these standards much before. So when a country has a new requirement, we are one of the very few companies that can actually meet those requirements well in advance. So thinking globally, acting locally. That has been our motto, that has been our philosophy. So even the vision of the company has been defined in this manner, saying that we need to think globally. We need to have the pulse of what's happening across the world, and we need to be proactive before it becomes mandatory. So ESG norms and whatever other things are getting implemented today, it's easy for us because we've already incorporated it. Even something as simple as the new labor laws that were notified recently, we are part of that 1% of the companies where there has been no impact for us because we were already in compliance beforehand itself.
Fantastic. I think you've given three areas where what you mean by world-class standards, world-class thinking, action has been demonstrated. Okay. Now I'll come to the next query. Now, how do you did touch upon it by saying India is a test market, but when you take B2B and B2C, what are the differences in experiences between the global and the Indian market, and how do you kind of, align them or manage them? What is the kind of model you have by which you're able to look at it as separate, as somewhat aligned?
Okay. So one, to be very frank, the Indian market is actually very unique compared to the rest of the world. Modern retail is what the rest of the world works with. For us, it's more of general trade, mom and pop shops. Modern retail is slowly growing within India. So the kind of distribution network that one has to have in India, the kind of mindset one has to have over here, the kind of demand pull that one has to create within India is completely different from the rest of the world. What we started with in India was purely an experiment. If you can create and sustain a product in India in this competitive environment where price matters, quality also matters, our confidence is that we can replicate this in different parts of the world. We can adapt to those local scenarios. Now, because we've been supplying to supermarkets, private label, we already have existing relationships in different parts of the world. So we are able to leverage on these relationships to have a dialogue with them. Why not introduce our own brand over there? And we're getting a very positive response over there as well.
So the diversity in the richness of the Indian experience, the demands of the Indian market, and leveraging on the relationships that you have globally are the key anchors on which you are able to manage both together as of now.
Yeah.
Yeah. Excellent. Now on to the next query, the last in my series. This is, there has been a generational change in how you've taken it ahead when you joined and then later. And you were mentioning that now it is more or less operationally autonomous the way you handle it. How do you handle the generational change? And what are the lessons from your experience for many others who have similar situations facing them in different businesses?
So one, I guess, see, when I first joined the company, my father first rule that he told me, nobody is indispensable in the company, including me. Okay. So that was the foundation on the basis of which the entire organization was built. With that foundation, first initially he said, just listen, let's observe, and then whatever has to be implemented, you can take it forward later. I still remember when I initially came in, I saw that in our organization, 20 years, I joined, I think, 2005. Initially, there was no technology used in the company, absolutely nothing. We used to get a fax from our customer. My father used to call a stenographer, shorthand, dictation, draft emails used to be written, and then it used to be sent out. From there to incorporating things like introducing Skype in the company, increasing efficiency, speed of doing business, to where we are today with the full-fledged ERP, technology implementation, now AI implementation, automation. That is the journey that we have seen over the years. I've been fortunate here because my father was always open to change, open to adapting new things. That made it easier for us to grow and evolve as an organization. So his philosophy has been, let the person do. Okay. Let them make mistakes. They will learn, they will grow. And that also trickled down not only to my generation, We're creating the foundation in a manner saying that, okay, we can't do everything ourselves. What I learned from him was being on top of everything. We were micromanaging every single order that was coming in. We knew what was coming in, understanding the product. We had to get into so much detail at that point in time. Today, when you're professionalizing, you need to be able to hand over this responsibility as well. If you don't hand over in the right manner, you're not empowering people to take decisions and you're restricting your own growth. So, coming from a founder led organization, transitioning to a professional organization, that entire journey also has obviously it has its own challenges, and we constantly keep learning something new every single day. We keep adapting, we keep learning new strategies, new concepts, and we keep implementing. If something doesn't work, we rework on it. We see how do we keep improving on a daily basis.
I think it looks like a successful transition. And I think, you have also, shown up as a person who's been able to take and, handle what was needed and then shift gears and get it to where it has come out. I mean, that's excellent. I mean, I'm not too sure how it works in all places, but I think I'm able to see that in the way you have come across when we discuss and the way you put things across. Thank you very much. I hand it back to Professor Rao.
Yeah. Thank you.
Thank you very much. I have many questions, but let me prioritize on one or two before I open the mic for the members around the screen to talk to you directly. Sir, the first question is, and very interesting takeaway from your earlier discussion is the retailer economics or the trade incentives, the channel margins funding your professionalization of marketing operations. It stuck with me. So that is one. The other one is with respect to pivot from B2B to B2C. While doing these things, did you get motivated by or inspired by any of the brands in India or abroad who have made this kind of a pivot? And if so, what kind of learnings that we can state as parallel for our learning?
Okay, so to be frank, there was no benchmark that we were looking at. There was nobody else who was, who was aspirational or anything like that for us. For me, it was mainly an experiment. Is it going to work? Is it not going to work? That is something which we didn't know. The idea was, let's just place the product. We had the product confidence. We felt that, listen, we are making so many amazing qualities, so many different unique products for customers across the world. We have so many blends of coffee that we co-created with our customers. All the IP on how to do this is 100% in-house. So the idea was, why don't we take some of the best products that we have, put it in our own brand and see what happens? Will we be able to sustain or no? Will people understand or appreciate the product and the quality? Coffee is something that's highly personal, and some people may love it or hate it. Okay, but the thing is, whether they like our coffee or sometimes even our competitors' coffee, we end up making both products or all the products. We have the ability to do whatever needs to be done. So creating that brand, the image, the expectation, that is what we had to learn from, and that is what we had to pivot on. And that's what we did. And we saw the response. The response was really good, very positive, which also encouraged us to further keep investing on this. So now we've created a foundation for coffee that is now sustainable, profitable, and consistently growing. Now we just realized we have a very good distribution net that we created with a single product, coffee. Now, with this distribution network, can we expand into other FMCG products? Is the next experiment that we started working on.
Amazing. Yeah. What started as an in-house experiment evolved into a daily strategy or an evolving strategy in itself, and that becoming the foundation for newer experiments. That's very interesting bottom line to look at the DNA of your organization. Thank you so much. The second question, sir, I have is in India itself is treated as a bunch of multiple countries, given any FMCG company would define that way, given the fact that the consumer behavior probably would change every every 20 kilometers or every 100 kilometers,
Mm.
depending on the product. One is to be armed with the knowledge that India offers. The other one is to study the consumer behavior in multiple other countries, especially in Europe and other nationalities where you are targeting. How is it different now between the India-based strategy and the outside India strategy? Has the first one helped the second, or it still stays very different? Or the first one is most challenging and the second one is easier? Some of those questions.
So that's a very good question. But so one fundamental difference between India and the rest of the world is in India, the consumption of coffee is actually quite small. So your pie is actually quite small. Now, when we are introducing products, we started introducing things like 3-in-1s, premixes, freeze-dried coffees, the more premium products. We started expanding the portfolio of products available within the country. So we are creating a new consumption pattern. So there's no benchmark that is there. Our intent was never, let me steal market share from the competition. That was never the idea. The idea was, I want to increase that pie. How do we increase that pie? And with that objective, we went ahead in India. When you go abroad, over there, it's a little different. Over there, the market is not growing. In India, it's growing at a double-digit rate. But if you go to the Western world and all, it's in some cases degrowing in single digits or it's growing in single digits. So in such a competitive market, you have to only focus on gaining market share. So our strategy in these markets is a little different. How do I gain that market share with the right products? How do I premiumize? How do I offer the right basket of products is how we look at it in these other markets. So the strategies are genuinely completely different in both places.
Excellent, sir. Excellent. So India strategy would be to gain market share and do all that is required to gain the market share. The base is smaller, but the opportunity is bigger, which is completely different world around. Yeah, that's the takeaway. So one last related question that I have before the members around the screen permit me to keep doing this talk with you. The question is, coffee is one of the most emotionally driven consumer categories in the world. So what kind of story that you want your customers to associate with your coffee brand? I'll give you an example, sir. In the initial stages, you have done wonderful retail push strategies. That's how many other brands also have tried, and that's a safer option to go with. Before legitimizing an entire trade's acceptance, you have actually tested it out, and later an organization was formed, as we discussed sometime back. There's a coffee called Luwak, which comes from Indonesia, Bali, around that area. So there is a story to that coffee. I'm just giving that as an example. So what kind of similar consumer stories that you want the consumer to associate with, given that it is an emotionally driven category?
Okay, so Kopi Luwak is actually banned across the world now.
Oh.
Because the whole concept is it's the poop from the civet cat that is taken. There's a whole story that was built around it. When this became popular, people started catching these civet cats and force feeding them. So animal cruelty and all these other things started coming about, and it became a complete no. Most of the parts of the world, they're saying that you should not consume this coffee. You have different parts of the world. In Vietnam, we've seen elephant dung coffee. The elephants are consuming coffee cherry, and they collect the seeds afterwards, and then they make a coffee. The concept is it's from the enzymes in the stomach that gives you a different profile. This is a form of fermenting that is taking place. Today, specialty coffee has evolved in such a manner, you don't have to do this through animals. You can put, for example, a watermelon in a coffee and then put it in a barrel and ferment it. You have whiskey barreled coffees. You have so much of innovation taking place today in coffee. You can get all these various taste profiles, notes, and everything by following different processes which are much more acceptable in the world. So while there is no limit to what one can do in coffee, but all these are niche segments which not everyone will understand, appreciate, or be willing to even pay for. What we started with are the base products which are more commercially acceptable. When we launched Malgudi, we wanted to create a emotional connect. So what did we do? We focused on traditions. So traditions has been the primary focus. So today, one of the insights we got is not only this generation, but even the subsequent generations, they don't know things like why do we celebrate Holi? Why do we celebrate Sankranti or Ugadi? Or any of our festivals. So why don't we teach them? Why don't we explain to them? So with that concept, we ended up creating Malgudi, which talks about traditions. Continental Extra, that we started focusing on women empowerment. And what we realized, the more and more insights that we started getting is the traditional mindset that was there for people in our country was, okay, women, they're expected to do a certain role, they're supposed to be in the house and all this. But there are so many women who are coming out of this role. Initially, when we came up with this concept, we got so much criticism against us saying that, who do you think you guys are? Why are you going against the Indian culture? So that is the kind of pushback that we got. But we said, okay, if you're saying that you will not drink our coffee because you don't agree with what we are saying, don't drink. That's fine. But we will pivot on this. We will push this more. Because we have an idea, we have a philosophy that we want to convey. We want to bring about that social change using these brands. Let it be athletes. There's so many people we have sponsored from the organization. There's so much of empowerment work that we have done, appreciated people, given people a voice that was not there before. So as a brand, people have connected to this. That loyalty has also gotten built on this. So as you said, it's an emotional connect that is there. So coffee, when you talk about traditionals and emotional connect, automatically that ability for people to connect is much more. So that's how it's not only for Continental as a whole, for every brand we want to create a connect. For Continental, this is our premixes. We are targeting more younger generation people, saying that you can have a cafe-like coffee at home at a fraction of the cost, you know, and you can take it anywhere you want. The people who've given us stories how they go on an Indigo Airlines, they buy a sachet, I want only hot water. They make the coffee and say, I saved 90 rupees in the flight. So these are stories that keep coming back to us. So that is how we're creating our own identity with each of our brands, not one identity for everyone, but a unique identity for each brand. That's what we're doing now.
Very interesting, sir. Very interesting. Instead of focusing on any sales story, you are latching on to the traditions and socio-cultural factors brand-wise. Each brand has a different story, socio-cultural factors that you're associating, and then strengthening your emotional connect with the consumers. And it goes much beyond coffee. It's not just coffee. And this pushback is normal. On this platform, we've heard the CEO of Titan speaking to us that when they initially made a product which is a watch kind of a device which gives an alert when women are traveling alone and if they are facing any kind of harassment. The alarm goes to some of the family members like husband, father, brother, so on and so forth. There was a pushback because after that, they stopped these women working in those factories and offices. But that was not the end objective. The objective was to make them work and empower them and at the same time offer safety through that device. But then that pushback has led them to come back with another strategy. So similarly, here the pushback in women empowerment that you have tried is only emboldening your resolve to go back and strengthen because it is appealing to large number of people. The society definitely needs it. Socio-culturally, we need to change the templates. So pretty good. More power to you, sir, on that. Fantastic. We'll keep asking these questions, and without being selfish, I'll now open the mic to others also to talk to you directly, sir. Allow me to open the mic. Mr. Arun Kaul, you can unmute and raise your question, please.
Sir, it's been so wonderful hearing your story. And we are really proud of what you have achieved and done for coffee in this country. Wonderful story, sir. My question relates to raw material. See, in the next 10 years, you are planning to expand manyfold. It's not, small percentages like 15% or 20%, but, many times over. So, what are you doing for raw material procurement in terms of coffee beans, cultivation, increasing the area of farming? And are you getting all your raw material from India, or are you importing it? And especially for units in Switzerland and Vietnam, are you supplying them raw material from India, or are you exporting from other? What I'm saying is that you'll require a lot of raw
Of
material for
course.
making the finished product. So
Yeah.
what exactly are your plans? I mean, if they're not confidential or you don't want to talk
Yeah.
about them.
No, that's a very good question that you've asked. So, one, I'm also a member of the Coffee Board of India, and I'm not sure if you're aware, about a month ago, the Coffee Board has formally announced 7 beans to 7 lakh tons. This is the objective. The entire government machinery, everyone is working towards doubling our throughput within India itself. So India today grows about 300,000 tons of coffee. We as an organization today, we are consuming about 150,000 tons. That's almost 50% of India's consumption, production, that is. So obviously we cannot use so much of the coffee from India, which is why we are today importing the coffee, processing and re-exporting. For whatever we sell within India, it's always 100% Indian coffee. We have brands like Percol where we are importing a small extent of coffee, paying extremely high duties, and then selling it within India to make people understand the different qualities that are available from different parts of the world. But globally, Indian coffee, we have always promoted because the taste profile that you get from Indian coffee, you cannot get from any other coffee in the world. In fact, Colombian coffee has always been hailed as one of the best coffees in the world, and it's sold at a very high premium. We've been able to match a lot of Colombian coffees using 100% Indian coffees. We've supplied them to Europe and other parts of the world, and a lot of our customers have appreciated this as well. Today, we are exporting a lot of coffee. There are a lot of people within India, farmers, growers, who are exporting directly to Europe and other parts of the world. So demand for Indian coffee today is so high that our Indian coffee commands a 30% premium compared to any other coffee in the world. So that is the demand pull that has gotten generated over the years.
But there's no likelihood of any shortage, like in case of chocolate, they say that the cocoa, this thing, there's a world shortage. So there's no shortage of coffee beans around the world.
No, so Brazil is the largest grower of coffee in the world, and they have doubled their production over there. Vietnam, which is the second largest grower, even they are increasing production. India is also on the path to doubling our production. So all these countries put together, they're meeting the demand. Now, frankly, everything is demand supply. The cost of growing coffee versus what's the sale price that you're getting. For 5 years, coffee was being sold at $1,300 per ton. Last year, we've seen $6,000 a ton. Okay, so at 1,300 also, it was sustainable for people to keep growing coffee. And 6,000 people have seen a lot of money, especially at the growers level. A lot of people have reinvested in increasing their acreage because they are also looking at the future. So in the last couple of years, we have done a lot of CSR activities. We've gone to Aruku Valley, for instance. In this region, we're working with tribals. We are creating collection centers. We're educating people. We are incentivizing them. Today, when you're able to pay this kind of a premium, people are realizing, oh, I can make so much money in coffee. Why should I do other illegal activities in these regions? So there's a lot of social reform that has come about also thanks to coffee, and that growth is there. So Shortage of coffee within India at this point in time, yes, there is a shortage, which is why the demand supply economics is forcing this 30% premium. But as the coffee consumption keeps increasing within the country, more and more people will be incentivized to grow more coffee, and eventually it should balance out.
Thank you, sir. That's very encouraging to hear. I may just mention that I'm a coffee lover myself, and recently I've been introduced to Old Monk rum, which is coffee
Okay.
flavored and which
Mhm.
is really wonderful. I mean, uh, you were mentioning something about,
Whiskey barrel coffee. Yeah.
yes, exactly.
Yeah.
So thank you very much, sir. Thank you.
Thank you, sir. Thank you for that response. Mr. Kush.
I just have two questions. Okay. One is that you have multi-country operations. Okay. So my question is that in terms of supply chain resilience and supply chain continuity, okay, catering to 110 countries markets, okay, how do you ensure that? And what would you attribute your one key operational issue which is troubling the or taking the management bandwidth in terms of their trying to deal with different corporate culture, different legalities and different compliances across the different clientele? Thank you.
Yeah. So across the world, yes, the compliance related issues are there. As in, Europe has completely different standards compared to, say, a Russia or a US or any other part of the world.
Correct.
Supply chain wise, one of the biggest advantages that we have is we have the ability to import coffee from anywhere in the world. Our
Okay.
biggest strength as a company has been to buy raw materials from different origins, bring it over here, do the blending, processing with technology in such a manner that we meet the end customer's requirement without a problem. Now,
Okay.
we have the ability to interchange raw materials when required as well. So all this has been developed completely in-house. Any manufacturer who wants to get into instant coffee manufacturing, the learning curve, you'll find companies that will come and say, I'll build the whole factory and give it to you. It doesn't help. Today, we have equipment that is there from almost 30 different countries. We have evolved over the years thanks to our customers. So, whatever we have done in our factories over the years, we've been able to adapt to all the changing requirements that are there globally. We understand, like, for example, I can give a specific example. Europe introduced a law several years ago for OTA compliance. That's called ochratoxin A. Now, ochratoxin A, earlier the rule was you have to have 10 parts per million. They changed the law to 10 parts per billion. Okay, so that is the extent of standard change that has come about. So when they changed this, we were one of the first companies in the world to actually enhance our testing capabilities, understanding what is the origin of OTA, and then finding a solution for it. We built equipment around this that enabled us to penetrate this market much more efficiently. So by the time other people realized what was happening, we already had a foot in the door. So
Okay.
this is how we have evolved over the years.
Okay. Just one further question to is that what's your ethnicity ratio in terms of Indians and multinational nationalities working with CCL?
So in India, all our Indian factories, we have only Indians working over here.
Okay.
In Vietnam, we have only Vietnamese people. We have, I think, about 50 people from India and about 300 or 350 people, local Vietnamese working over there. In Switzerland, we have all local people working over there in our factory.
Okay, fantastic. And what's the total employees of
Around 3,000. 3,000 is the total employee count that we have approximately.
Okay, thank you. Thank you. Thank you, sir.
Yeah.
Thank you very much. We have taken those questions. I'll now, we are actually through with the time that we borrowed from Mr. Srishant. So we will conclude it. This is a fantastic conversation, sir. This conversation, very interestingly, a math topper, an IT law and cyber law expert talking about evolving strategies of a physical product company. Mostly it looks traditional and it moves from business models to build to last kind of deep strategies as well. So that's the first interesting point that we have gathered. As we ventured into the discussion, we've also picked up some of the brand acquisition strategies, co-creating brand and then trying to be part of the game, gain a foothold, and then send the entire operations and team into that. Wonderful retail strategies through which I mentioned earlier also, the retail incentives and trade margins helping you to not just gain your foothold, but also redo the entire strategy based on the initial success and then professionalize the whole thing. The fourth one and very interesting one for me is your organization that comes across as a compliant company with respect to the local laws, not just the GST laws, not just the sustainability part of it, which you have explained, the entire ESG area that you have very voluntarily come forward as part of the organization's vision and value-driven approach. So that's very interesting. Thinking globally and acting locally is part of this thing. And the next part of the strategy or growth is to plan your succession, evolution, which is deeply embedded with the empowerment when you professionalize the entire organization. That's a very interesting takeaway. And while doing all these things, you are constantly trying to establish new consumption patterns for coffee. That stays at the heart of all the operations and strategic moves and investments in various geographies. That's very, very interesting. One for the road I have is, I hope, which we had a conversation a little before we started this, coffee being traded widely is hopefully not affected by the geopolitical scenario, more especially the theater of war that is that's already unfolding in front of our eyes. Hope the supply chains are not affected by what's going on. We wish you all the best. We would love to learn from you by following this thing. I request all the members around the screen to follow carefully some of the experiments that these people have made. And I'm told that there is a brand called Karafi on road number 2, Banjara Hills in Hyderabad. That's where their corporate office is situated. While we have completed this conversation in 1 hour, 8 minutes, 45 lakh cups of coffee of CCL were consumed while we engaged Mr. Srishant here. So that's the range of impact that we are talking about. Thank you so much, sir, for your time and helping us understand the strategies involved in coffee, especially related to CCL. I was always wondering, that's a beautiful brand name, Continental Coffee. You have acronymized it and deprived us of the benefit of that amazing global connect that you had in your original name. But anyway, I have my own thinking, but you have your strategy. Dr. Prasad, any last query?
Yeah, I was a bit curious, about that coffee shop you said, which is there in the ground floor. It's
Right.
an adjacency, though it is run by not by the main business. So, what is the learning? Is there any learning and connection through learning in that?
So actually, yes, quite a bit. So this coffee shop was actually created by my wife, and she used to accompany me on my travels, and she felt that there's so many amazing specialty coffees which are there in different parts of the world. Why don't we bring this into our country? So her concept was food pairing. I want to pair the right food products, right desserts with the best coffees. So with that logic, she created Carafa. And seeing the response that we got for Carafa, one of the thinking processes that we have is, why don't we also come up with a retail chain format under Continental, and we're doing some experiments along these lines as well. So all these are learnings which are helping us get into adjacencies. It's constant experimentation. You never know what will work. So you have to keep experimenting, and that's exactly what we're doing.
Thank you.
Thank you, sir. Thank you so much. I so much look forward to having my next meeting with you, or my next date at Carafa.
Sure, Carafa.
Look forward to meeting you as well to catch up on a few other things if time permits.
Thank you.
Thank you so much for this conversation, sir.
Thank you.
Ladies and gentlemen, that was an amazing conversation. Please follow CCL Products India Private Limited and learn more about coffee, drink more coffee, and contribute to the growth of coffee around the world. Because I don't know why certain people drink coffee and why certain people drink tea. I have not understood. But I know that there are distinct tastes for various people. But as we keep studying more, we'll understand about consumer behavior, what drives people, and categorize them as coffee lovers versus tea lovers. And in India, tea is called chai lovers versus coffee lovers. Wonderful. While we keep learning, we want to thank Mr. Srishant Challa for this amazing time, energy, and expertise that he has lent in this leadership conversation. Thank you so much, sir.
Thank you.
See you all next week. Have a great weekend and good night. Thank you so much.